I'm Charlotte McLeod with the Investing News Network, and here today with me is Frank Holmes, CEO and Chief Investment Officer at US Global Investors. Thank you so much for being here online with me today.
It's great to be with you, Charlotte.
It is great. And of course, we're speaking about 2 days after the US election. As of right now, we are still waiting to hear the results. And I want to talk to you about how gold is doing. It was a quiet week for gold until today when we saw it shoot up to 1950. Can you talk to me first about that price activity? Is it related to the election? Is it what you expected?
Well, yes, on a longer term, there's no doubt I've written about this, why I think gold can go to 4,000 in the next 3 years. And I've been asked, Charlotte, who are you for? Are you for Trump? Are you for Biden? And I would share back with people, I'm not pushing the red button and I'm not pushing the blue button. I'm pushing the gold button. Go gold. There is no doubt that there is something that's important for people to recognize. It's not just America, but the G20 countries are really implementing and practicing in many different ways this MMT theory, that's modern monetary theory of giving out money, sending out money, coming in and investing in ETFs to change the interest rates, what the Fed did for munis and for corporates. This is unprecedented. Swiss government floating a bond issue, no one buys it, they buy it themselves. Take that money, they go buy Apple stock and Microsoft. This is a brand new world and we're seeing it all over. So I think that gold will have this secular bull market in gold. And I think today is just a sign of that. It looks like, which is the best, when you looked at Obama in his first term, where he had basically Congress, Senate himself, all being Democrats, it was a terrible market. And gold had a rally and then it crashed. And saying now it changed. And what changed was Congress became Republican, Senate became Republican, the president's a Democrat, the best for the stock market. The best. So it looks like we're going to get that again. We're going to have the House being controlled by a marginal amount by the Republicans, the Senate controlled by and then the president will be a Democrat. Very bullish sign. He's a moderate, President Biden, and I think that the monetary policies and the stimulus is just going to continue. And I'm reading that last week was the EU said they're going to ignite again more money printing in Europe before Christmas. So this experiment is only so bullish. And we see the stock market. What's up today? Materials and technology. Now, in the last secular bull market we had for commodities, 2001 until 2007, gold stocks were on an incredible tear. I had many 10 baggers in our portfolio. What you need to have the stocks go up is you need the commodity go and the stock market. If the commodity goes up, the stock market doesn't go up, you never make a lot of money in basic materials or resource stocks. So I think it's going to bode very well that we're going to have this great run in gold stocks in particular.
Okay, a few follow-up questions there. As you mentioned, it does look like we are heading toward a Biden presidency. But one thing I've been asking people as we go through this election cycle is, does it really matter who the president is? I wondered if you could give your take there. What if we do end up with another 4 years of Trump in office? How does that look for gold?
I don't think it matters that much. I think what's important is probably better for mining because he's deregulations. He's all about deregulations, whereas Pelosi and Biden are all about more regulations. And that really morphs the formation of capital. So when I look at, I always say, don't follow the political party, Democrats or Republicans. Look at the person and look at their policies and the agendas they push. Because it's government policies which are a precursor to change. Rates going up or down, or taxes going up or down, or regulations.
Right. I like that you make that distinction between what's good for gold and what's good for the mining industry, because they are different things and we don't always talk about that. Another thing I wanted to follow up on is, historically, is there any party that is better for gold? You were talking a little bit about the House and the Senate breakdown and how that influences. Could you go into more detail on that so we can learn a little more?
Well, if you really take a look at just the debt ceiling for the past 30 years, 40 years, it doesn't matter who the president is. They always keep expanding the debt ceiling. And I think that that's the real reality of it's a mechanism for them to create growth. And you have to take a look what industries they're going to focus on. And I think we're seeing technology have a boom. Solar will do well. There'll be more proposals for solar. I think coal will have great challenges. So I'm really focused on the stock market as a whole. I think you have to look at is free cash flow. It's a very important word. And what does that mean? You have a salary and you take away your taxes and you take away your whatever other benefits you have to pay the government, and you're left with this cash. Now it has to go to pay your rent, your car, your food, your lifestyle. Do you have any money left? If you have no money left, well, that's most businesses. If you have to go to borrow from the bank, then you've got a problem to live from. If you have free cash flow, well, now that extra cash flow you can put in the bank, you can do lots of fun things with it as a person. Well, the same thing as a corporation. If they have free cash flow and they can put in the bank, they can buy back their stock, they increase their dividend, they can acquire someone. So you find this companies that have free cash flow yields are the better performers. And what happened a year ago is the S&P 500 had a free cash flow yield of 2.5%, and whereas gold was still negative. Gold in all the 100 gold producers we track. Come March of 2020, free cash flow collapses for the S&P 500, except for technology stocks and certain food delivery, Pizza Hut, etc. And you also see gold stocks all of a sudden free cash flow. And they start showing up in IBD's list of growth stocks. You're seeing Kirkland Lake and Franco, Nevada. And this quarter ended now, June, is going to be a record, unprecedented for gold producers of free cash flow yield. To me, this is very bullish for the gold mining producers, which will always have a benefit for the explorers.
Right. And I did want to make sure to ask you about those results that are coming in from the miners. I think we're starting to see some reports come out. Are there any trends you're noticing there? Is there anything more you can say about that?
Well, they're more focused now. Before, they just want to grow and grow, and they did bad deals. They grew their top line, but the quants of the world, how they pick their stocks is on the value metrics per share. What does that mean? It means, did your revenue last quarter go above the average for 4 quarters? And did your cash flow last quarter go above the average for 4 quarters? If those two things happen, your stock all of a sudden started buying, saw buyers coming in. And if you had free cash flow, then you saw even more buyers come in. One of my great performers was Kirkland Lake. It had the highest revenue per share growth. And it was the best performer. It made Eric Sprott $1 billion. He resigned from the board. He sold his shares, but then all of a sudden, now it's left. They bought Detour. Detour is a high-grade producer. Kirkland Lake was the lowest gold producer. All of a sudden, it was accretive. And what did you see? You saw revenue grow per share, but no cash flow, minus 6%. Stock didn't perform in the gold rally. And now, just yesterday, they announced free cash flow. They're now putting cash in their balance sheet. I think stocks like Kirkland Lake will be on a tear.
Okay, and what about the junior side of the equation? I think what we've seen there is a lot of companies able to raise money during the last 6 months or so, but they're out looking for discoveries. And you've spoken before in the past about how difficult that is. So what can we expect from that type of mining company during this cycle?
I think there's smaller pools of capital to take that risk. And it's gold mutual funds, etc. We're still one of the leading investors and explorers, but we have technical people to assess those. And as World Precious Minerals has been on a tear, it's done a great job. It's the top performing in the past year. What I think is going to happen is that we're seeing millennials, and I've seen this with my JETS ETF. In March, it went from 70 million to 35 million, and now it's almost 2 billion. It had an unprecedented growth. Well, what triggered that were millennials day trading coming out of Acorn and Robinhood. And as they bought more, then hedge funds that wanted to short airlines went long also as a hedge. And we saw money coming in that it was unprecedented. In 70 days, almost $1 billion came into that ETF. So the price discovery of new retail investors with no commissions trading through Robinhoods of the world. TD Waterhouse is the same thing, no commissions to trade this, giving you fractional shares. That's been a big game changer. But what's different between Robinhood and Waterhouse, TD Waterhouse or Fidelity or Schwab is on the toolbar at Robinhood. Gold is an asset class. So there's more interest in gold. And you can see that a lot of them I know bought in our JETS ETF. 25,000 bought it into the JETS ETF. Well, it went sideways and then it exploded up the first leg 50%. They all made money. So I've stayed, I think coming back is the millennials are very important coming in for price discovery. They want to explore. They're using the internet and their particular YouTube and a podcast to try to learn more about the speculation in the space. So I remain very bullish about that.
Okay, and taking you back to the gold price, we know you have a longer term prediction of 4,000. What is it looking like as we head toward the end of the year? Could we hit 2,000 again in 2020?
Oh, absolutely. For sure. It's just the DNA of volatility. And if you look at the DNA of volatility over any 10-day running period, it's easy for gold to go another 3%, and it's going to be there. So I think the big magic is, does it make a new high going into year end? That would mean we've got 20 out of 21 years, 80% of the time, 17 years out of the 21 years, gold has been positive. Gold bullion has outperformed the S&P this century by 3-1. And when I hear CNBC New York talking heads about negative on gold, it's gone up too much or it's going to fall further, etc. It's been an incredible 10% weighting in any asset portfolio, any asset allocator. So I think that gold will continue to grow because of this unprecedented money printing. The MMT, also the Federal Reserve putting out lifelines to 15 different countries, helping them with US dollars, all this money printing. If we look at the last cycle of 2008, the money printed for the Fed balance sheet was $3 trillion. It's now 7. It's going to go to 10. Well, gold went from back then from basically 700 lows up to 1900. It's only rational that it can go from this run here started around 1600. It can go to 4,000. It would just be in a relative basis. So I think that gold is that unique animal, and a 10% weighting is just prudent. And that's why I launched, Go AU, because I saw that money was going into ETFs. I did the JETS ETF and the Go AU ETF on the New York Stock Exchange, and it's gone through $100 million in the past 6 months.
Right. And on the note of money printing, going back to the election, that's one thing that people were telling me ahead of the election is no matter who wins, there will be more of that. I did wonder if you could put it into a more global context, because that's something that's happening not just in the US, but in the broader world as well. You've spoken before of central banks as being a cartel that acts in unison. Could you give us that global context right now on money printing?
It does have function because these finance ministers, in particular central bankers, quite often live and stay in power a lot longer than presidents do. President maybe 4 years, maybe 8 years, but a Federal Reserve, look at Greenspan, how long he was in charge. By the way, great fact is when Greenspan left, there was lots of complaints, but the balance sheet of the Federal Reserve was 6% of GDP, and everyone was upset with that. Under Powell today is 33%. It's a 5-fold increase. Now, coming back is that they last longer. So the central bankers country club of connections, and they have their own meetings and G20 finance ministers. So we go back to 2001, it was all about synchronized global trade. It drove everything. China exploded, demands for commodities took off because everyone wanted to trade, get tariffs down. After the crash of 08, 09, it became synchronized taxation and regulation. And now it's war on COVID. So it's synchronized money printing to fight this coronavirus, keep the economy going, and they're all doing it in unison.
Right. And we almost got through this interview without mentioning COVID at all. Where is that as a factor for gold right now in general? I know it's related to many things, but what are the main drivers, and is it one of them still?
Yeah, oh yes, there's no doubt. COVID's been weaponized by political groups to get political power. More draconian measures, there's no doubt. But people 65 and under, those who got the coronavirus, 99% are able to go back to work. 1% die. and the data points for influenza is slightly less than that. The issue is that when you're over 65 or you have high blood pressure or high diabetes, those data points are taken out. The median age of people dying is 81 years old. So it's really become a big weapon. And you saw that what locked down all the older age people or anyone in the hospitals, create two sets of hospitals, one for normal care and one for elderly care, so that you don't mix them up. And I think that's been sort of the smorgasbord. But we saw this in Texas, how politicized it became. And it happened, same thing in Italy, it's happened in England, you see it around the world. So I think it's been a very clever weapon. It's a very serious disease to get. And I hope none of my friends get it. Those that have, they've all rebounded, touch wood, and I'm happy for them.
Okay, and going full circle on the election right now, we've talked a lot about how it relates to gold. For other commodities, would you expect either party to be either beneficial or detrimental looking at the other metals?
Well, they'll be anti-coal. They'll be anti under Biden. That global warming fears and concerns will drive it. And what President Trump did is he shook up the EPA and he streamlined regulations. And the average person doesn't get the narrative because the media won't cover it. But it was becoming so excessive that Obama couldn't get a lot of his $700 billion money spent because the EPA basically wouldn't let projects go through. Trump comes into power and he said, well, if you don't want to approve the Obama checklist, you have to report to the Department of Justice. Immediately, bridges, roads, everything started getting, it was a huge economic boom. And so I think that maybe Congress, hopefully, and the Senate will stop another explosion and unnecessary regulations. But I do think I know my Global Resource Fund, which is just crushing the performance of its peers, has an overweighting in solar energy rather than oil, than the conventional oil, which is usually 25 to 35% of those indexes. It's like 4% for us. It's predominantly anything for alternative uses of energy. And the concept of lithium, cobalt, these are all going to be nickel. They're all going to be very important metals in the metal business under Biden. And if you're going to look for a global gold producer, it'd be Hochschild, has the only rare earths deposit. As a gold company, it's like buying Tesla with gold and silver. It's out of Peru, listed in London, trades over the counter in the US, but its primary market is London. But it's a great silver gold producer, profitable, but they do have the only mega deposit in the Western Hemisphere.
All right, and any final words of advice you would leave for investors as we head toward the end of the year?
Be optimistic. Just be really, and be thankful. Be thankful. You grow up in America, it's the greatest nation in the world. If you grew up in Canada, it's also one of the greatest nations in the world. It's amazing to recognize that and respect and appreciate it. Don't get so negative, because lots of research has shown you'll miss opportunities. A gift could be put into your hand, you won't see it because you're so worried about Democrats, Republicans, liberals, or progressive conservatives, NDPers. Forget it. Look at the policies and believe in the will of people, especially when it comes to Canada. Anywhere where there's a common law practice, those economies are more resilient and they always come back.
All right, well, I think that's a nice positive note to end on. Thank you so much, as always, for coming on to talk.
Anytime. And stay safe and healthy.
You too. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Frank Holmes with US Global Investors.